Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into the third quarter of this year. We are continuing to see this volatility that I've discussed. We've got the Fed, of course, raising rates again. I've had questions from clients. How much more rate increases do you see? There's a lot of talk about recession. Are we in a recession? Is there going to be a recession? Is this going to be a repeat of 2008's recession or 2001? So ultimately what I would say is this. I don't see the Fed raising rates a lot more after this year. We're already seeing signs of the economy slowing, which is bringing inflation down, not as quick as it should, but I think as you go into the next couple months, the read on inflation is going to be drastically different than it was a few months ago, meaning we should start to see bigger numbers on the way down. It's really the year-over-year change of inflation that's the big concern. So don't expect prices to go back to where they were a year ago, but what the Fed's trying to do is ultimately slow the progression or the rate increase year over year on inflation. So again, when we look at next year, 2023, I don't see a lot of interest rate increases unless inflation stays incredibly sticky, which again, from our research, that is not showing. There's a lot of pessimism in the street. There's people that are talking about recession and all kinds of really kind of words that get people maybe a little bit concerned. And it's rightfully so. You always want to be concerned when you hear the word recession, but that doesn't mean that the world's coming to an end. And I want to explain what a recession really is. If you're driving down the road and the speed limit is 70, and you're doing 75 and there's an accident up ahead, people slow down, let's say to 60. That's a recession. The economy slows down a little bit. It doesn't stop. Now, while the equity markets or the bond market may overreact temporarily, what usually you'll see within about 9 to 12 months, a lot of the volatility or the drawdowns in certain asset categories are often recouped, or certainly a major chunk of that drawdown is recouped. So how much more could we possibly go down before things start to get better? That's really anybody's guess. But I'm not looking for a prolonged contraction. We are not looking for a 30-40% decrease in equity prices, at least anything that would be sustained for years and years. That just simply, I don't see that in the cards. Inflation's a problem. It was really brought about by bad policies and overspending by the current administration. And ultimately what's happening is this money has been spent or will be spent, and inflation at some point will start to get more tame and will start to come down. And that's going to be good for the overall U.S. economy and really the world economy. We continue to be invested in the U.S. mainly. We will make adjustments to our portfolio as necessary. But as always, there's always going to be short-term time frames. Short-term to us is less than 12 months. That is very short-term. You have to expect every year is not going to be up. You have to expect you're going to have periods that can be 6, 9, 12 months long of volatility or negative results. It's the nature of the beast. 70+% of the time the equity markets are on the upside, 30% of the time they're on the downside. But if you look at the next 3 years, we see much greener pastures. So we're really looking at what's going on in the next 3 years versus what's going to happen in the next 3 months, because in the next 3 months, a lot of things can happen, and things that you really ultimately cannot predict because it's very, very short term. But again, I don't see the Fed's raising rates a lot as we go into next year. I see inflation starting to tame, and most other people out there in the investment world are seeing the same things we're seeing. With all the pessimism, that's actually a net positive. There's so many people that are so pessimistic and or underinvested or wrongly invested, that often bodes well for really some upside surprises. So again, we'll make changes as necessary. If you have questions about your portfolio or any concerns, make sure you do call the office. We can talk on the phone, schedule a phone review, or in office, whatever is best for you. And make sure you have yourself a safe and profitable day.